Alright everyone, welcome back to the channel for another on-chain metrics update for Bitcoin. So, while Bitcoin loses the support of the 200-week moving average, I thought we'd revisit some of the main on-chain metrics that I've been talking about on my channel, saying these are the main indicators I'd be looking at to call for the Bitcoin bear market low. At this moment in time, they're both capitulating, so let's see what's going on over here, starting off with the MVRV Z-score. So the market value realized value Z-score, this is a simple on-chain metric that I like to use to identify periods in which the BTC USD price is either highly extended to the upside or highly extended to the downside. When this indicator tops the upside, the bull market top is normally in, and when this indicator bottoms to the downside, that is normally when your bear market low is in. I'm not going to explain in depth how the MVRV Z-score works because I've done it in many of my videos, so if you're a seasoned veteran, you should already know. If you want to take a pause of the video and look at this indicator overview and look at how it works, feel free to. The gist of this is it calls when the markets are either overextended to the upside or the downside, and it does this through a simple Z-score test using the market cap and the realized cap. Now, whenever the market cap moves below the realized cap, basically meaning when the price of Bitcoin moves below the average price or the realized price of Bitcoin, the bottom is normally in. And as you can see, when the blue line crosses below this orange line, the blue line being the market cap below the realized cap, you have a bottoming structure. This is when the Z-score, which is this red line, comes down to this bottoming formation, this green box. We can go to the downside of it, but nonetheless, typically we do bottom within this box or just below this box. Now, what I want to update on this is the fact that we poked our head above it the other day. We gave you an update on this, the 28th, so this was about a week ago. And now we've pushed back into this, so it looks like, you know, we're heading back down. We're still on an uptrend on the Z-score, but nonetheless, the Z-score has not had a convincing break to the upside, and it doesn't look like the charts want to have a convincing break to the upside. I don't want to make this about TA. I do want to look at the on-chain metrics for the next video or two, but you can see that Bitcoin very much looks like it's struggling. We are in a bear flag. We're below the 200-week moving average. Just not a lot of things that I would be getting out of bed for at this moment in time, especially after the last two failed moves. What are the other on-chain metrics doing? I specifically want to talk about the hash ribbons indicator now before we wrap up the video, because we could go on look into Bitcoin, and for example, we could go through many of these Bitcoin charts. You know, I could make a video on pretty much every single one of these. But in my opinion, these are the one with the most accuracy. These are my favorite ones. So these are the two that I want to focus on. We've looked at the Z-score. Let's look at the hash ribbons indicator. The hash ribbons indicator simply is two moving averages, being the 30-day moving average and the 60-day moving average. And these blue and red lines are simply moving averages of the Bitcoin hash rate using the hash rate raw values. We can also look at this on a 7-day moving average and see that the Bitcoin hash rate is heavily moving to the downside at this moment in time. It had a very nice top, but we're very clearly having a run to the downside. Let me refresh it so you can see. Now, when the hash rate is going down, it's either a sign that, well, it is a sign that miners are turning off their equipment for one reason or the other. Maybe it's been banned in their country. Maybe they don't have enough to pay the electricity bills. Maybe the cost of mining Bitcoin is too high and it just doesn't make sense for them to run all these rigs anymore, so they're selling their equipment. For whatever reason they are turning off their computers. The Bitcoin hash rate is going down. The network is becoming less secure, and subsequently it's cheaper to mine that same amount of Bitcoin, which is a good thing in the long term if you're going to be setting up rigs in a bear market. But nonetheless, at this moment in time, hash rate going down is not a good thing for the price action. It makes the Bitcoin network less secure, and typically you can see these massive swings to the downside in the hash rate are normally a leading indicator that the price action will very soon follow. So when we do look at the 30-day moving average and the 60-day moving average for the hash ribbons, we talked about this before. Once again, if you're a seasoned veteran of the channel, you know what we're looking for. We're looking for these periods in time where the blue moving average, which is the 30-day moving average, crosses back bullish above the purple line. So you can almost imagine this as EMA ribbons, you know, when the short-term moving average crosses below the long-term moving average. So once again, blue line below the purple. When the blue line moves below the purple line, you're basically flipping bearish. Blue line moves above the purple line and you are bullish because the short-term moving average is above the long-term moving average. Now, when the blue line, being the 30-day, curves to the downside and then flips back bullish, bear market low is in. This was a black swan event, so bear in mind, looking at 30 and 60-day moving averages is not going to be the one to call a bear market low. This was a prolonged dip to the downside though, and you can see this perfectly. The hash ribbons started to roll back up to the upside, and that is when it called the bottom. Took a little bit of extra time for the confirmed bullish flip on these, but nonetheless the hash ribbons bottoming out was a signal that the price was ready to move back to the upside. So what are the hash ribbons doing right now? Last time we checked on these, they were moving to the downside. 30-day and 60-day were moving to the downside, and now what have we got at this moment in time? 60-day moving average has been stagnating because not a lot has been going on in the hash rate. If you're taking a 60-day moving average looking at the past couple of months, it's more or less the same kind of regions it's been at, but within that, in the lower time frames, you can definitely see, or particularly in the higher time frames, but you know, plotting that on a shorter term moving average, you can see you've got this very, very plain and simple. You've got highs up here, you've got lower highs, you've got lower lows rather, lower highs, lower lows, lower highs, and then I imagine we're going to come down and make lower lows. So the hash rate's heading to the downside, and we can subsequently expect it's going to take at least a little bit of time for the 30-day moving average to bottom out on the Bitcoin hash ribbons indicator. So there we go. I did just want to give you a quick update on the MVRV Z-score and the Bitcoin hash ribbons indicator, two of my favorite on-chain metrics collectively. Looking at these on-chain metrics, even down to the hash rate on the raw values, even looking at the 7-day moving average, when you zoom in, it's not looking good for any of these. All of them are calling for a further capitulation to the downside before we do have that Bitcoin bear market low. Price action is not looking too good for Bitcoin either. I'm going to make a separate on-chain video very, very soon in which we're going to be whale watching. If you're a seasoned veteran, you know what that is already. We're going to be looking at what the whale wallets are doing, what the retail wallets are doing, and yeah, all I've got for you in this episode. As always, my friends, cowboy out. Peace.